Hello friends, welcome to Startup Trades. Today we will examine stocks and understand why one should invest in them. But first of all, what is a stock? A stock, also known as a share or equity, represents ownership in a publicly traded company. When a company decides to go public, it issues shares of stock that can be bought and sold by the public on a stock exchange, such as the New York Stock Exchange or Nasdaq. When you buy a share of stock, you are essentially buying a small ownership stake in the company, which means you have a claim on a portion of the company's assets and earnings. As the company's value and earnings increase, the value of your shares may increase as well, allowing you to sell them for a profit. Stocks are considered to be a form of investment, and are commonly bought and sold by individuals, institutional investors, and mutual funds as a way to diversify their portfolios, and potentially earn a return on their investment. However, it's important to note that stocks can be risky, as their value can fluctuate based on a variety of factors, including the company's financial performance, industry trends, and broader economic conditions. But why do people invest in stocks? Following are 4 reasons why investing in stocks makes sense. Let's see. First is for high returns. One of the main reasons people invest in stocks is the potential for high returns. Historically, the stock market has provided high returns over the long term, compared to other asset classes like bonds and cash. Second reason is opportunity to diversify. Investing in stocks can provide an opportunity to diversify a portfolio, reducing risk by investing in a variety of stocks across different industries, sectors, and geographic locations. Third reason is ownership in a company. Buying stocks represents an ownership stake in a company, which can be appealing to those interested in supporting a company's mission or believing in its future potential. Fourth reason is liquidity. Stocks are considered to be a liquid asset, meaning they can be bought and sold quickly, providing investors with the ability to access their money when they need it. It's important to note that investing in stocks also carries risks, including the potential for losses if the value of the stock decreases, which is why it's important for investors to carefully consider their goals, risk tolerance, and investment strategy before investing in stocks. That's it for now, and thanks for watching. Please like, comment, and subscribe to our channel. See you soon.